The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Daryl Martin.
Welcome back, folks. We get Daryl Martin, Tom O'Brien. Appreciate you growling a problem with us out here. My son, Tom, he's up in New York at a wedding right now. And we're going to swing you right over very quickly into this NDX 100. Daryl, what's going on, brother?
Hey, man. Loving life, dude.
It's a beautiful, it's a beautiful thing. And I'm going to show you something real quick here, folks, okay?
What do we got?
So, watch this. You get the NDX 100, folks, right? You're coming up to ice, okay? You come down hard, you're coming back up to ice, and I'm going to show you, just if you haven't traded this Nadex product yet, okay, you want to jump on it, okay? The screen you're looking at right now, I literally had bought 4 of those contracts basically about 20 minutes ago. On that smash down, I actually went long, folks. See that? Bottom line is that I'm going to basically sell them right now, and then I'll explain the whole rest of it when we do it, because I'm not only going to sell them, I'm going to sell them, and I'm going to flip this thing right around. So you're going to see that little baby is in there. Oh, auto received. Okay, that's in there. Let me get that done. No. There they go. They're gone. Okay. So I just turn around. I'll explain this in a second, okay, between buying and selling. But what I'm doing here specifically is this. Now watch. I'm going to go back to, I'm going to flip this position around, folks, okay? I went long at the lows, and I'm going to flip it around again. Where am I? Right there. And I also did this with gold, too. Contract. That's still open. Hold on one second. I got to make sure that closed.
Just click on your working order. Just double click it, expand it down a little bit.
Contract open position. Here, one second. I better bring this down and bring it back up again. One second.
There you go. That's right down there. There you got it. If you get it a little bit lower, you can see working orders at the bottom of your browser.
Yeah, I know. Okay.
Then you can just drag it up.
Okay.
By clicking on the words themselves there.
No, it's done, right? Okay, hold it. You gotta love doing a program and simultaneously. Oh, see, I gotta sell it real quick. I have to flip this thing around. How quick was that? Okay. Here. Let's see this thing. Go ahead, Daryl. We just talk for a second. I'm gonna flip this position around, folks.
Okay. Log out, log back in.
Yeah.
That'll help. All right, so looking at flipping a position on the US Tech 100, looking at it to pull on back down. You go in there on the exact same contract, or let's see, probably like you want a close contract as you can get if you're going to go short, and make some nice profit on that.
Right, I was doing the 80.1. Yeah.
There's an 11 o'clock right now.
Oh, it did sell. Profit. Okay, so that sold right away. I'm good. Yeah.
Okay. Good. It's probably being on the radio, sharing everything makes it a little bit wacky sometimes.
No, totally. So now on the other side, now watch this, folks. Okay. So here, thanks, Daryl. 1 second, hold on. So I just want to show you the other side of this. Okay. So because it's so cool, man, these spreads. Because you know what was really cool is that. Okay, so it's not ready yet. There's one. Okay, sorry. Okay, so what I also did, folks, is this. Now this is where this gets really wild. Okay. And I want to show you something. When you're looking at this, you see those gold contracts down there? I have 10 contracts. And I got those 10 contracts this morning when gold was at 1164.36.
Beautiful.
And the thing that's amazing about this, folks, is this. When you trade gold, period, okay, gold can go down 50 bucks, okay? I had a defined risk on this, but wait till you hear this. The defined risk, okay, at 64
140.
was, it was 140 bucks. Was, well, 1,400, right? You know, it was
exactly.
1,400.
10 of them, yeah.
Okay.
Which is, I mean, nothing on a day like today on gold.
No,
so,
do you know what my top side is, folks? 10,000. 10,000. This is good. This is a 1250, man. This is like, insane. Do you know what I'm saying? I say, oh my God, I'll take this. I'll take that bet, right?
Exactly.
You know, so if you trade the metals, okay, bottom line is that come over to our website, check out this platform, because what you do have, and I'm going to go right back to, and I know, let's see. The NQs are almost ready, man. I can't wait to sell those NQs again. Bottom line is that when we talk defined risk, folks, the defined risk that is out there in certain contracts, it's phenomenal. Like this one in gold today was phenomenal, because you know that gold can go down to another $50, okay? And it's one of these sit, wait. And of course, what I did in the correlation is that I was keeping my eye on the dollar index. I mean, I know the whole world saying, oh, the dollar's up 1,200 ticks. Well, guess what? The dollar's up 1,200 ticks without any juice, okay? So that was saying to me, that's what it is, and just basically putting together, I says, you know what, it's perfect. It's a Friday. They should be able to, they already whacked the thing. Do you know what I'm saying?
Exactly.
You know, so it's pretty amazing.
It's the exact layout you want.
It is. Now, let's go back to the, I'm going to go back to the tech spreads again for a second so I can show you something. So the tech spread, the first one that I was trading was the 80-point spread. Now, I like the 80-point spread. And you know what, Daryl's amazing, is that, so what you had happen here also, folks, is this, is that this spread was 45.50 to 44.50 to 45.30. But the thing that's amazing that you want to wrap your head around is that when this was getting put on,
right,
NQM5. So watch what happens. When this thing was getting put on, is I put it, you know, I really got it as close to the bottom as you can almost get. I put it on at the open. Well, we're talking about a 45, what did I say, 45.50, right? Well,
yeah.
It goes to 45.49, but what happens, folks, is that when you, as Darryl, you know, Darryl, I heard you explaining this on your program the other day, which was really cool, is that because you're so far down at the lower end of the box, there's going to be premium in there, okay? But this is what you want to wrap your head around. When there's premium in there, what happens is that the premium will stay in there until you get to the middle of the spread. So you can actually go in and go out of those spreads, which is amazing. You know what I mean?
Yeah, so the premium doesn't just disappear just because you got in the trade. Exactly.
It doesn't. And because what happened to me 2 days ago, right?
Well, I'm collecting the crap out of premium right now.
Yeah, no doubt. And what happened 2 days ago, so what happens, folks, is that that premium will stay there. Now, if you are really right on the trade and it goes up to the middle, yeah, you're only going to get the middle. But big deal. That just means you made money anyway. So a defined risk type of deal here is absolutely phenomenal. You know, when you basically look at this whole deal, how this whole deal is set up. So, you know, check it out. I mean, it's a vibrant platform. It's a fast platform. But in this type of environment, it's absolutely awesome. Now, we're looking at the NDX 100 right now. And so what I'm waiting for is this. 4489 would be the number I'd want to sell it at. You know, so that would be selling it short. You know, I already sold the longs, because what you also have happening here is this, is that all the surprises are going to come from the downside, folks. So that's my take on it anyway. Do you know what I mean? So you got to be long, you got to be worried going long. But this is a true trader's paradise where you can go long, flip the position, go short, let it go back down again, go long. If the volume characteristic is set up, you know.
Yep.
You know.
Well, and I mean, and talk about premium, like just the way to go in with these.
Yes.
Like last night, I went in, I put these on.
Okay.
And I bought the US Tech 100 4450 to 4490.
Okay.
And I bought it for 4478.8. Okay.
Yep.
And that's 12 points. Okay, 12 full points lower than where the market is.
That's amazing. Okay? Yeah.
All right. I sold the 44.90 at 45.30.
Yep.
Okay, the market's sitting at 44.90 last night.
Right.
I sold it for 45.06.1.
Okay.
16 points higher than where the market is.
Amazing. Right. What a spread. Wow.
So I got a 28-point profit. Like if it expires in the middle, I make $280 per contract here. So I got over $1,000 profit potential trade on. Okay. But what's really amazing is you go and you take that number, I have that much room up and that much room down.
Yes.
To break even on the trade.
I know.
So we're talking like 56 points, a range of 56 points. And if it moved that full, like at the top or bottom of that range,
right,
I'm break even worst case.
Yep.
Always $1 above it, make $1 every tick I'm inside of it. So a lot of prop potential in there, a lot of cool ways to trade it. But I mean, that's just what I put on and went to sleep last night.
No, there's no doubt about it. There's a lot. There's a lot of what is happening, folks, is that the spreads are getting tighter. Also, the system itself is fast and vibrant. There's no two ways about that. The spread ratios, though, when you start looking at them, are pretty amazing. And particularly, I love the idea. I was cracking up because the swings now, folks, will go outside of the boxes, even the 80.1, because the swings have been so big. And it's like, hold it, man. I like this because where it's a two-way market, what does happen is that, guess what? That's, you've heard that ad many times that, just give it an hour, give it 2 hours, because if the volatility stays, you don't stay when the position is good. Get your money, folks, just like it did on the, I'm not going to stay in that baby all day long. It's like, take it and run, man. So.
Exactly. Yeah. But I mean, you can go in, grab it. And, I mean, you don't have to sit in the thing till the end. And
no.
There's so many ways to trade it. You can go. I mean, I'll go in. I mean, you could literally short right now. You're talking about I'll short when it gets to this price. I mean, you can go in and sell the 44.90 to 45.30.
Yes.
At 44.96.7.
Listen, I think in this break, it's going to be close. I think I'm going to probably sell them. We'll see how this shakes out. Darryl Martin, Tom O'Brien, you give us a call, folks. Our phone number is 877-927-6648. Dow's down 12. Nasdaq is off 2. S&Ps are flat. We're going to be right back.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? taking something that's good for you, something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Daryl Mott, Tom O'Brien. Appreciate you growling and prowling with us out here. Right now, you get the Dow up 14, Nasdaq's up 6, S&Ps are flat, and we'll get some action. So what you're going to be looking at right now is that we pull this up for a second. I love this flipping around. So what you're looking at there, folks, is that when that gold got trashed this morning, you can see this 1164.36. Now, we're at 6.7 right now, and I expect that, you know what, there's not going to be that much more movement in it, okay? So the bottom line is that I'm going to sell into those contracts. I'm going to take my bread and get out of here, and that's all she wrote, okay? So now, okay, that being said, close that baby. Okay, so then, okay, where are you? Gold, daily. 1150. Whoops, 1 second. That's not executed yet. Okay, so what I'm looking for, I'm gonna do that sell, and then I'm going back over NQs, because these NQs are getting ready right now, and they're you're at 1186, and what you're going to see is that at 1186, okay, okay, that baby sold. So watch this now. This gets really interesting, because Daryl's taught plenty of people of how this thing shakes out. At 1186, right, what you're going to see, let me bring this back over here. So at 1186, because we're in the middle of the spread right now, right, you're going to be ticking almost tick for tick. NQM6. No, 5. We're in year 5. Okay. So what I'm looking to do, 85, perfect, is that my take on this is that you're coming up to ice. It's perfect. Okay, so 1186. I'm going to sell 4 of them. So my risk is 1,700 to make 14. That sounds insane, folks, but it's not. Let me just play it first so you can see how this shakes out. Because this is just like trading the NASDAQ futures. The same thing. Do you know what I mean? I'm just looking to basically make some bread on it. And I'm actually going to do 2 more. So that gets me 1186. So I get, each 2 is a contract. So I just risk another 8. So I get basically 3 contracts on it. And I'm on at 4486.50. You know, so now we start rock and rolling there.
That is awesome.
I'm telling you, man. You know, when we talk, what happens with volatility, folks, okay, volatility is a trader's best friend, okay? Just so investors don't like volatility, and I don't blame them, okay? Because what happens is that, you know, it goes up, down, and all around. A straight trend, a bull can like a straight trend because, you know, it just trends, you know. Bottom line, once volatility comes into the marketplace, which we have, this volatility I expect will stay for quite a while.
Well, that's a great one too that you picked right there because it's like right near the market within like a couple points.
I know that's it. That's
so
my
you're
point.
not.
So look,
yeah, you're not really, and it's not like the like I said, it's not like the premium just dissipates.
No,
so
it doesn't. I got it as clean as you can get it.
2 points on today is nothing.
Exactly.
So.
And the NASDAQ, forget it, man. Okay. So what is the goal here? Okay. So the goal goes like this: you take the NQs, right? And because you always both sides. Okay. This is just you take the NQs, and I say, okay, listen. I get a high volume swing low here. I get a Friday. I know that everything's going to die down at, basically 1 o'clock, okay? So it's real possible that before we even get off this show right here, that I might be done for the whole day at 10 o'clock, and not 11 o'clock. Because if this comes right back down, it depends how, it comes right back down, and we get into I would expect this to go to 62, so 20 points more down. And if it comes down there with lighter volume, then I'd close the trade. I'd close the trade there anyway because that's good money, right? And then because it's a Friday, folks, I wouldn't go back in. If this was a normal day, I would. But a Friday in the summer, there's no way I'm going to go back in at 11 o'clock because most of the trading is going to be done by 12, the latest one. And this is what happens. If you have a highly volatile day like we do today, even more so because what has happened is that those large desks, they just made the bread. It's because of the same volatility we were talking about. In, out, okay, let's go, man. We're out of here. It's the weekend. It's the summer,
It's the way you're supposed to do it anyway, right?
That's totally, man.
That's the whole point.
Daryl Martin, Tom O'Brien, we appreciate you growling and prowling with us out here. Dow Industrials up 9, NASDAQ is up 2, S&P's down 3.5. We're going to be right back, folks.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they have just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Darryl Martin, Tom O'Brien. We appreciate you growling and prowling with us out here. And don't forget, folks, Darryl does an outstanding show every Tuesday, Thursday, 1 to 2 Eastern Standard Time. Also has a scanner. The scanner, folks, is a must if you're trading this Nadex product. So first, you come over to our website at TFNN. You'll see the banner on the top, on the side. Hit the banner. You can bring up the exchange. They'll put $25,000 of paper money into it. Then stay right there at TFNN. You can test drive Darryl's scanner 30 days, absolutely free. It gives you the deviation points. You can trade literally right off the scanner, so which makes it really easy to basically find out which contract you want when you understand the strategy that you want. You know, it's not going to tell you to go long or short. What it is going to tell you, though, is that what is the best probability of what contract you want for the probability of what you're trying to do. So let's go back over to these NQs for a second, because NQM5, because watch, I'm going to show you, it's been trying to break, and it's going to just pop above slightly, and I'm going to sell right into it again because we get 5 minutes. Now watch this, okay? So the bar, that's the bar right there that we first were talking about. It's 4489.75, and we're right there. And so I'm going to go over here, and I'm going to go right, I get the 20-minute indices up, and I'm going to go back over to the Tech 100, and I'm doing the 80-point spread, folks. So what's happening there, let me pull that up. Watch this, if you want to see this. 4490, the future's at, and we're at 4490. The exact same thing. So what's happening is that you just define risk. And this, you see how, now what happens is that it's 792,808. That's how this thing is shaking out. So bottom line, I hit that. I'm going to get that. So that gives me 8. That's a beautiful thing, man.
There you go. Just flipping it back and forth.
It's, well, you know, it's yeah,
You're like, yeah, that's just how I do it.
Well, I love what I love, folks, is this, is that that defined risk, okay, is so cool, you know, because what happens is that in a market like this, okay, you can get, you know, 20, 40 NASDAQ points up and down in a heartbeat, okay? So the only thing, what you're giving up, okay, is that you're giving up that, let's say if I'm short and it goes down tremendously, or I'm long, it goes up tremendously. Yeah, you give up that aspect of it, but guess what? It's worth it, because, you know,
you can always get another contract.
Exactly. You just play how you, exactly, and you're not gonna go to the bathroom and come back and you're wiped out. That's, you know.
Yeah, you don't have to. You get a margin call, stuff like that. You
There's no way. I mean, you can't be wiped out. That's the thing that's so cool about it. Do you know what I mean? It's like, okay.
Exactly.
You know? And what tends to happen is that just what you saw here. Okay, so we did the first one long, you know, flipped that around, did the gold long, flipped that around, and so right there you're already in a winning position. And what does that mean? Well, that means that you basically can take a little bit more risk. Do you know what I mean? Because it is my money because I already won it. But the reality is, you know, at the end of the day, you know, it's like, okay, where we are now. Now watch this. This is interesting. So now we're only down 6, okay? But yet we're only down 6, but the account is still only down $262 with 8 positions. You know, it's like, really? You know, and I'm at a 415. You know, so what would happen to close that position, which you can do, by the way, okay? That's not a big deal. Well, yeah. Where my head would go is this. This is a natural bounce in a market that wants to go lower. That's all it is. It's coming up to ice right now. The pain threshold would be about...
Now let's go over ice, because I know a lot of our listeners haven't maybe heard you talk about ice.
Right. So,
and you talk about a lot. I know in your book as well, and you know, like seminars that you've done.
Right.
So that might be a good opportunity.
No, it is. It is. I know, yeah. Because they're natural levels, folks, that where you either break down or break out from, that markets love to come back to and test. So in this case here, if you're watching, you know, the Tiger TV. I have 4 days up of the intraday 10-minute chart. So what you're looking at is that, you know, if we go back 3 days ago, you're going to see that, you know, we had a break from 525 down to 487. And then it comes all the way back up intraday up to that 526 area again. You break down again, right? And they're large, you know, breakdowns. So what we did this morning, you are sideways all night long, right? You broke down. As you broke down, you took everything out. You know, we went from 4492 down to 4449, and now it's crawled all the way back up to 4492. And what you look for is this. I look for lighter volume on the, you know, as you're going up, and then we're going to be looking for a rejection of price. You know, we're right at it right now. But that's what markets do. They love doing that, okay? Now, can you break higher? Absolutely, man. But if you're going to break higher, what you're going to see is a huge expansion of volume as you're pushing into that swing point. What I have...
This ought to be the oscillation zone right here.
That's right. So. That's right. And I have protection on the other side. Now, watch this. This is really weird. It's not weird, but it's just how markets work. At 4493.25, that's where we had gone topside, folks, at 9:30 yesterday morning. Well, what happens is that we had 19,000 contracts there. That, even though we went topside, that actually acts as resistance now, you know, to get through that, because there's so much money lost up there. So,
oh, that's exactly what we're shooting for. Like, yeah. you want those areas where those memories are located.
Exactly, man. It's crazy, but it's just how it works. And then, so on the other side, like, meaning on the way back down, and that's why I said I'm expecting us to come back down, but what does end up happening on the way back down, it doesn't have to get to the low, because as it comes back down, that bar that was generated at 10 o'clock this morning, okay, at 9:50 this morning, is going to access some support, and more than likely, on a Friday, it's not going to break back into down below that level. You know, that'll stop it, so that high volume low, the high of the bar of the high volume low will basically give it some support on the way back down also, you know, so.
Exactly. And I want to point out one of the things too, going back to premium collection with that move back up.
Yes.
To that 4490, being that, you know, right around that ice level right there. Yep. And notice how on the Iron Condor I have on the upper one right here.
Okay, yes.
I still got the long one on that you called too, by the way.
Yeah.
And but notice now we have both sides are profitable because it's coming back towards the center.
That's amazing, right? Yeah, right.
So, because remember, I bought them like 26 points wide.
Exactly.
Okay, I went in at basically 26-point profit range.
Right.
And so as it's pulling right back to that center strike, now the premium's coming in on both sides of the trade.
I know. And that's, when you bring the platform up, folks, and trade it for a while, what we're talking about right here, that'll take you a little bit to get used to because you really got to be in them. Do you know what I'm saying? But it's so cool when you understand it, Daryl, isn't it? Do you know what I mean?
Oh, yeah. Exactly.
When you get up to the middle, you say, oh, my God, now you're in the middle of the spread. And that's why when I just put those on, that was really sweet being in the middle of the spread because when you first get on, trading those middles, you may not like the risk versus the reward because you actually are risking money versus, some of these other ones. I happen to like them because it's just like, if I just give you an idea. So that value there, I just put up, what, $3,000 NQM instead of, and I got, I put up 3,000 instead of what, 12? No, I put up 3,000 instead of 16,000. That's, it's 3,900 and I put up 3,000. Give me a break. Do you know what I'm saying?
Yeah. Well, I mean, and you have, if there was some like Fed head S&B blow up, whatever.
Right.
Like, you do have a worst case scenario.
Yeah.
Not that you have to stay into that worst case scenario, just like you don't stay on futures. But if something just goes kaboom.
That's right.
There's no margin calls when,
No.
Feds like blow up interest rates.
Yeah. On
Nadex.
Exactly. Exactly. Yeah. There's no doubt. And that's crucial to understand, I believe, in this market right here that we're in. Because we are going to have a trapdoor that's going to open, folks, and when it opens, it's not going to be cool, man. That's, it's just a matter of what day it's going to be, So, and, if you trade gold, if we go back to that gold contract for a second, what happens with gold, the gold one actually was even better, folks, for defined risk type of deal. Because gold can get out $50. The whole world thought it was going to get out another $50 today, probably. Do you know what I'm saying?
Exactly.
And
yep.
And what's interesting about that one, Daryl, is that, and this is where I guess the premiums, they were probably figuring that either no one's buying gold or whatever. It was like I paid a half a point. I paid hardly anything, and yet I was still, I don't even think it was a half a point. Do you know what I'm saying? On the spread, and it was, it was only what, $14 away, and I had 100. I had 86 on the top side. Do you know what I mean?
Yes.
So. It just to follow us, what that means, folks, is that normally when the spread's in the middle, it's a 50-50, but I paid 50 cents. It's like, give me a break, man. That's well worth it inside the gold market. In the gold market, it's forget it, man. So.
Well, it's just it's the peace of mind, which actually makes you a better trader.
Yeah.
Now, obviously, you have to understand the contracts, but the cool thing is if you'll stick to, and this is a big thing I try to teach people.
Right.
If you'll stick to the spread where the price is in the middle.
Yes.
Okay. And you'll stick to the ones that are end of day.
Right.
All right?
Right.
Then you're basically mirroring the futures or Forex market.
You are. Right.
And so by doing that, you don't have to go through 50,000 spreads.
Yep.
Okay? You keep it really simple. And you mirror the market. You don't have to deal with premium, making it or paying it. Okay?
Right.
You're just trying to trade direction on the chart.
Yep. Exactly.
Keeping it really, really simple.
Right.
And if you do that, then all of a sudden now the spreads become very easy. $1 a tick.
Yeah.
No matter what instrument you're trading, everything ticks in a last digit of 1.
Right.
And once you have down that basic, then you're free to focus on the charts. But now your heart doesn't have to race everywhere because you have a defined risk, you have a max risk, and you get freed up to find some more. Find some more opportunities to see what's out there,
and to start understanding them as much as you do. Do you know what I mean? Because, you really understand these things, and it's really cool, man. Understanding, more difficult strastrategies, okay? It's not that they're difficult, but they are more. Do you know what I'm saying? So,
yeah,
but
more
it's really,
complex.
it's awesome. Yeah. It's great, man, because you want to do that, folks, because the decay of premium, and that's what Daryl's taking advantage of, is huge. It's the name of the game. And, as he said many times, before you used to have to, wait for option expiration. Well, guess what? Option expiration is happening every minute in Nadex product.
Yeah, I used to do, rut contracts, and I'd go in.
Yeah.
And, I was trying to make my 5% a month, and I did it pretty much just about every month. I had like 2 losing months and years, but I was waiting a month.
Right.
Not a day or a couple hours.
Exactly.
And so the compounding obviously is greatly inhibited.
It is.
And the risk was, quite frankly, much higher.
Right.
When I was doing those 5% contracts.
Sure.
Like 5% on investment.
Right.
So, I mean, the contracts I'm looking at today, I'm looking more at on investment around 140% of risk to max profit potential in the trade. So not 5%.
Yeah.
So the risk reward is better, and I can do it every day.
Right.
So, and I did that last night. Like I said, it wasn't something that I put on and, I'm sitting there like in front of the computer all day,
Right.
And, like I said, went to bed, next trade.
And it's nice going to bed knowing that you have decay working in your interests.
Exactly. And I knew it was just blown out of proportion being NFP and everything else.
Yeah, that's
even
right.
if I'm wrong, then I'll do it. I mean, I woke up like 30 minutes before, looked at where the market was, before NFP came out.
Yes.
For a potential NASDAQ strangle and all that. And so you can put like strangles on like right before them. So I let the decay work all night, figure the markets oscillate somewhat, and then go in and you can put a strangle on like right before the big announcement comes out, just in case it explodes.
Right.
And if you want to, like a short term one, like a 10 a.m.
Yes.
And to head that position off, boom, it comes out. Either you make money or you don't, or it's just sort of flat on there. Okay, boom, get out of it, like pay your bid-ask spread, and then let the premium just keep working for you.
Right.
So there's a lot of cool ways, a lot of cool things you can do with it.
Yeah, there's no doubt. And, if we take a look overseas, folks, basically Europe is still, down 0.5% to 1%. So when you have that phenomenon happening, bottom line is that, yeah, we made it back to flat. But you're going to see more selling pressure in the next hour and a half or 2 hours.
Well, and you called it. You said we're going to hit 44.90 and boom, we're going to pull back.
Yeah.
And it did.
Yeah,
so
we're at 82. Hey, listen, it's real possible, man. Look at this. Should we say that? 82.
We got to bounce off this? Is that where you're going?
No, it'll be hilarious if I get out of this thing before the show ends, and it's real possible because we get this little pullback starting right now. And the key is, folks, if you don't get greedy, you keep grabbing it, because when you get in this zone, bottom line, you just keep grabbing it, man, and just go from there. This is Tom O'Brien, Daryl Martin. We appreciate you growling and prowling with us out here, folks. You stay right there. Get over to our website at TFNN. Test drive that Nadex platform. You're going to love it, folks. Dow's down 15. NASDAQ is flat. S&Ps are down 5. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Darryl Martin, Tom O'Brien. Appreciate you growling and prowling with us out here. Dow's down 28, Nasdaq's off 5, S&Ps are off 7, and check it out, folks. Okay, so you're going to see I am going to be done for the day right now because bottom line is that we have watched this baby. So this little baby is coming in, right? We just come down from the 93. We're at 77. We're at we get 4 minutes into it, and that's not enough volume right there. 4 minutes into it, so we come back over here, and this is pretty sick, okay? Because this position's already up $500. I'm going to turn around. Let's see. I gotta buy them, right? Yeah, hold it. I'm short. I'm going to buy them. I'm going to buy them. We're going to clean that thing up. I'm going to place the order. I get 8 of them, and all of what? 45 minutes. It's like a $1,100. Not bad. There he is. I'm done. That's a beautiful thing.
Nice. There you go.
And what you have is so watch that whole scenario there, folks. This one here. It's important to understand on this one too, is that as you're coming down, and I see as I'm going against volume, this thing was way too light. Okay, we're 5 minutes into it. You're coming in with 3,600 contracts. And you're coming into 13,000 contracts. It's like, okay, this is going to mess around with the light. I suspect it's going to make its way down here, hour, 2 hours. But what also happens is that why mess with the markets when, in in this case, that was a matter of what, all of 13 minutes, for $600. Do you know what I'm saying? So you take it, you grab it. I like to be off on a Friday afternoon. I mean, of course, I'm going to do the show. I like it, but I'd like to be able to
sit back, relax, chill out a little.
Or just think. Yeah, exactly. Yeah. Do you know what I mean? Because when you are doing this, folks, okay, the bottom line is that what you do not want to do is be doing something else at the same time. You just don't want to be doing that. I've been doing the radio show for long enough that, that happens too. But even in that context, if I wasn't doing the radio show, I'm even faster. Do you know what I mean? But
oh, exactly. Yeah, because you're talking and everything else and trying to explain everything. And go through,
But the key is
that's why you got to treat a little lighter side a lot of times. Whenever I'm on the radio, I'm like, yeah, exactly. You know?
No, there's no doubt. There's no doubt. But listen, the rest of the day out here, you can expect this volatility to continue. I expect that what we are going to see, you're going to see the markets flatten out here, folks. Okay. So if we look at, let's just look at the SPY for a second, you get a decent understanding. Yeah, see, this is perfect. Oh, baby, this is good as it gets. Daryl, there was this guy, Rick, up in Canada, man. I love this guy.
Okay.
I've heard him from a while. And he really figured out that, these dojis like sitting in the middle of moves. Now, dojis, you get them at highs and lows, folks. But in the middle of a move, which you're going to get today, this is the middle of the move, and it would make sense because the top is 213, we're 209, and the bottom of this thing is at 205. Maybe right. the first one maybe is 207. It's probably 207. No, that's right. No, if we go 13, that's 4 points and 4. Yeah, that's the middle of the move. So that's saying that our probabilities on this move is that we are going to get out of the March 26 lows. So.
Nice.
Yeah, I know.
We have to play that next week, see what we can get going on.
Exactly. And here, if we go back to the NQs just quickly, you see that little bounce comes in, folks. And see, if you don't take the money, folks, the market takes it right back from you. That's the bottom line.
It has a nasty habit of doing that.
Now what you want to remember is that you're in the market to make money and go have a good time. So bottom line is that, now that's it. Go have a good time. Daryl Martin, Tom O'Brien, we appreciate you growling and prowling with us, folks. Daryl, thank you so much, man. Have a great weekend, safe weekend. We look forward to the show on Tuesday.
All right, see you then.
Folks, you stay right there, man. Mr. Basil Chapman's coming up. He's going to be growling and prowling with you. Nico and Paige are going to make you healthy and happy. David White, I'll be back this afternoon, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.